So in the first video, we talked about what the first thing you need to do when you're getting ready to buy a house. And now we're going to discuss what's next. Hi friends, welcome to Moms and Money, where we talk about managing money, making money, and saving money for the women in the household. So as you know, in the previous video in this series of the home buying process, we talked about the first thing you need to do when you're thinking about buying a house, which is getting your budget in check. You want your budget to be you want to be really comfortable with your budget. You want to know your budget in and out. You want to have your zero-based budget down packed so that you exactly know what you can afford now with your current income and with how you're currently living, whether you're renting or what. You want to know what you can afford. So having your budget intact is key so that you know what you can afford, what you can afford comfortably. Also, we mentioned and talked about, trying to pay down your consumer debt and saving for a down payment. And in this video, we're going to talk about what's next, because once you have your budget in check and you kind of understand what you can afford as far as a mortgage payment to be, now it's time to move to the next step. Again, it's so important so that you figure out what you can afford before you dig into financing or go to finding a lender or finding financing or anything like that. You need to figure out what you can afford comfortably, not as far as the size of the house, but as far as what your mortgage will be, whether you can afford that comfortably or not. Now, many of you may be asking, well, Gia, I have my budget in check, but what should I do? Should I save for a down payment or should I pay off my consumer debt? Which should I do? Well, this is going to explain it to you, okay? When you get ready to buy a house, one of the most important factors when it comes to lending, very, very important. It's not the only thing, but it's really, really important. Probably right up there with your credit score is your DTI, or debt to income ratio. So a DTI is basically the percentage of your income that pays for your debt for every month. So your car payment, a mortgage if you have one, a credit card, any kind of debt, any personal loans, bank loans, hospital bill, any kind of debt that you have, what percentage of your income pays for that? And that is what the debt to income ratio is. It's a percentage, okay? So for example, if your monthly bills are, let's say you have a car note and a credit card and a student loan, okay? And that comes up to $1,000 a month that you're paying altogether. I'm just throwing these numbers out here for easy math. It's $1,000 a month for your car note, your credit card, and your student loan, okay? And let's say that your monthly income, your gross monthly income, not your net, so this is before taxes and 401k and all that is taken out, your monthly income is $4,000, let's just say. That means your debt to income ratio is 25%, because 25% of your income is going toward paying the debt that you currently have, okay? That's all debt, not just consumer debt. So 25% is a really good debt to income ratio. Typically you want it to be ideally below 35%. But if you really want to make sure you get good financing and good rates and low fees, you want to get it as low as possible. This is why the answer to your question as to whether you should pay your consumer debt or if you should save for a down payment, I will always say pay your consumer debt down, because it's going to lower your debt to income ratio, especially if your debt to income ratio is like 35, 40%, 50%. If it's that high, you really need to focus on paying that down, because at the end of the day, even if you do get financing, you do get into a house, you don't want to struggle to pay that, okay? You don't want to go through a foreclosure. You don't want to go through a short sale and stuff like that. You want to avoid those kinds of mistakes. I know things happen in life that aren't out of our control, but at the end of the day, the things that you can control, you want to avoid those mistakes, So get your debt to income ratio down, because again, that's going to help secure your financing. Now, credit score and everything else, that's something separate, but you want to, in order to really secure your financing, you want to have a lower debt to income ratio. Now, I'm just talking about in the United States. I'm not sure what it's like in another country. I've never purchased a home in another country, so I wouldn't know. Definitely do your own research if you don't live in the United States, and do your own research based on what I'm saying here. But you definitely want to focus on paying down your debt, again, because that's what's going to get you the financing. Now, I want you guys to educate yourselves and have all your ducks in a row before you go into looking for financing, researching, and trying to get approved, because you don't want any surprises, last minute surprises. You know, you don't want to have your credit pulled and be like, well, what the heck is that? You know, pull your credit. Figure out what your debt to income ratio is yourself, okay? Get your budget in check. Pay down your consumer debt. Now, I'm not saying that you won't have to save for a down payment. I mean, there are lots of different loans, and I'm gonna do a whole separate video about financing altogether. But this video is about, you know, the first two videos are about the legwork that you do on your own before you start contacting banks and having your credit pulled by outside companies and everything like that. You wanna know what's on your credit report. You wanna know what your debt to income ratio is. You wanna know what kind of mortgage you can afford, how much house that you can afford comfortably. The worst thing you can do is be house poor. You can have a beautiful home, but then not be able to furnish it, not be able to live your life comfortably. You don't wanna do that, you know? You wanna have long-term wealth. Okay, because doing things like that, it's not going to get you there. You want to focus on having long-term wealth. Okay, so again, you know, some people just want to save for the down payment, and then they kind of ignore their debt. And I'm not saying that you can't get a house if you do that, but typically when your debt to income ratio is high, on the higher end, it's really hard to get financing, for one. For two, you're going to pay a lot of fees. I mean, it's incredibly expensive that gets tacked on to your loan. You know, you don't want to like pay an excess amount of money when you don't really have to, if you focus on, you know, paying your debt off. And three, it just makes, to me, the home buying process a lot longer if you don't do your homework beforehand. You know, again, you don't want any of those surprises. You don't want them to say, hey, this is on your credit, what's going on with this? And you have no idea what it is. You want to educate yourself, and you walk into the situation where it's like you want to be able to shop several lenders so that you can get the best rates, you can get the best deals, you can get the least amount of fees. You don't want to be in a position where there's only one lender that's going to approve your financing, and you're like kind of forced to go with them. You know, you want to be in the position of power where, you know, you can decide who you want to give your business to. Okay, so that's why it's important to have your budget down. You can download my free zero-based budget in the description box, or you can purchase some of my printables if you're a pen and paper type of person. I have courses that kind of walk you through how to get yourself out of debt and stay out of debt. All of those links will be down in the description box. But in the meantime, you know, sometimes it's a long road to home ownership. It's a long road, but it's so worth it in order to get your net worth up, in order to really have that long-term wealth. A lot of people put that tied into their home, the purchase of their home. So it could be a long road, y'all, but you want to take this road seriously, and you want to make the best decisions, especially if you're a first-time home buyer. You know, so do your homework. Do your budget, okay? Figure out what you can afford, what kind of mortgage you could afford comfortably right now with your income, what it is right now. Of course, we would love and pray for our income to be projected to increase over time, of course. With inflation and everything else, it kind of has to. But for this, when you're getting ready to buy a house, you want to know what you can afford right now, because girl, when you get into that house and that mortgage payment comes, they're not wanting you to pay in the future. They're wanting you to pay right now, okay? So you get your budget in check so you can figure out how much you can pay. Then you want to calculate your own debt to income ratio. Calculate it. If it's too high, you know you have to pay off your consumer debt. But if you're on the line, maybe you're at like 30%, maybe to get yourself a little bit more comfortable, get it down to at least 20%. Get it down as low as you can. I'm not saying that ideally, I would love for you to be consumer debt free, but I know that sometimes that's just not possible for everyone at this time. And I don't, home ownership is a wonderful thing. I just want you to get into the right home. I think everybody should be able to buy a home at some point in their life. And if you're really ready, and if you're really serious, and of course your long-term goal is to be consumer debt free, then you need to go for it. Especially if your debt to income ratio is low enough so that you're comfortable with the mortgage payment, because there's so many other things that come with buying a house that you just don't foresee. So leave a comment down below and let me know, do you know what your debt to income ratio is? Even if you're not buying a house, it would be helpful to know what your debt to income ratio is. Of course, if you're consumer debt free, praise the Lord, then you know that your debt to income ratio is close to zero, or if all you have is your mortgage, it should be very, very low number. So leave a comment down below and let me know if you're getting ready to buy a house. What else would you like to see in this series? In the next video, we'll probably go into detail about financing, the different kind of loan options, because I know sometimes that can be confusing. Thank you guys so much for watching. If you haven't hit that subscribe button yet, you can tap my picture up above, and you can also check out my previous video right next to it, and all of my social media platforms all listed down below. Thank you guys so much for watching, and I'll see you in the next video. Bye.